Per usual, everything else channels for educational purposes only and is not intended as financial advice. Macro Monday time. Let's take a look at some legacy charts. Crypto's up today on easing geopolitical tensions and a few crypto headlines hinting at more products for TradFi, more treasury companies for TradFi. We have a Solana company in Japan spinning up. We've got a Ripple ETF in Canada spinning up. We've got Tron going public, apparently. So things are happening on the crypto side of the house. On the global ETP flows, another great week. Most of this, again, we looked at yesterday from the US side, but I think it's a good idea to just take a look globally. Most of the flows will always probably be from the US. So it's definitely worth taking note if that isn't the case, if we're seeing a big jump in Germany or Hong Kong or somewhere else in Europe. We're not really seeing that currently. I think the biggest thing that stands out finally is ETH is getting some flows, whereas the other alts are not. ETH not keeping up with BTC, but that's par for the course. It's just where are the flows going right now, today? Where have they been going for the past couple of weeks? It's been ETH. And that's unsurprising based on price action. If and when Solana breaks higher, you're going to see more flows into Solana. That's just how these things work. But across the board here, it's slim pickings outside of ETH flows. Now, to be fair to these other products, most of these products don't have a US equivalent yet. So we're currently waiting to hear from the SEC on that front. Looking at the calendar this week, really the only important thing most people are going to care about is JPOW at the press conference, 2:30 p.m. Wednesday, be there, be square. I think there's also a new dot plot coming out this week, which would hint at where they think rates are going to be going forward based on how they vote. I don't take much stock into it, but I know a lot of the market participants do. So that'll be something else to pay attention to on Wednesday. But it looks like there's a virtually 100% chance rates aren't coming down either this meeting or next meeting. August is Jackson Hole, and then September would be where the market thinks rates may finally start to come down. Based on where unemployment sits, based on where inflation sits, based on the Fed's dual mandate, I can't blame them for saying we don't need to cut yet. We're not there. We're almost there, but we're not there. And there's some uncertainty on the horizon. And that's probably what Jay Powell's going to say. He's going to say there's geopolitical stuff, there's tariff stuff, and that's that. I don't think he's going to say much of anything because not really much has changed. Data's starting to get better. It's looking better, but unemployment isn't bad enough to cut and inflation isn't good enough to cut. So now we're just at this spot. This is where we are. Crypto clearly doesn't care. Legacy clearly doesn't care. Both of those are mooning without rates coming down. So if we're doing well without rates coming down, why are we rooting for rates to come down? That's the thing. Now, people who are borrowing are rooting for rates to come down. The housing market is rooting for rates to come down. United States debt issuance is certainly rooting for rates to come down. But it doesn't look like risk assets need rates to come down to do well. This is a potato quality map of rate decisions this week. Outside of the US, we've got Sweden, Norway, Switzerland, Japan, probably the big ones, Brazil. But lots of rate decisions this week. Globally, the trend has been rates coming down. It has not been rates coming up. It has not been a hiking cycle. It has been liquidity going up. If liquidity falls, if rates go up, then I'd expect crypto to have a hard time. I'd expect fixed supply assets to have a hard time. But we are still in this place where global liquidity is rising and rates are coming down. And that's favorable for risk assets. And it's not what we saw in 2022. It's not what we saw in 2018. Both those times we had a hiking regime in the US. So we could see extended cycle here into 2026. We could see a muted cycle. I'm on the fence on what we'll see. I'm just going to play it by ear. But I don't think there's any rush or expectation to sell anything just yet. I think there's an easier decision to be made on the cycle in Q4 this year because we still got a little bit of time based on prior cycles. But I would definitely keep an open mind to the possibility that 2026 isn't a complete and utter total disaster based on expectations. And most altcoins, I think, are still year-to-date negative. So they could certainly use rates coming down, QE getting spun back up. We're not quite there yet in the United States. One of the main reasons, of course, is inflation. Now, this is trueflation. It is goods focused. It has dipped well below 2% and has gotten back up there post-tariff, but is still hovering in the low twos. So not really sounding warning bells just yet. Now, if we look at what happened September to January, this is when the Fed cut and inflation had a nice big bump. And that's the risk. If you cut early, you risk reigniting inflation. So that's what JPOW doesn't want to do. Based on what we've seen with Trueflation, if they were using real-time data, they probably would have started to cut already. Looking at CPI for next month, we're only 16 days in here. CPI is expected to start to bump up a little bit on their metrics. PCE for last month is expected to come down. So again, you're going to hear calls from the establishment that, hey, we should bring rates down. We're closer to our target. We're still not there yet. So it's tough. This last mile stuff, we're close, clearly. We're just not there yet. And if you're the Fed, you probably want 3 to 6 months of 2% levels that are stabilized. You do not want 2.3 1 month, 2.6 the next month, 2.4, 2.8. You want a stable 2% is my guess. And that's what JPOW is going to argue until his term is over in May. So even the suggestion of rates coming down in September, we're going to have to see the data move quite a bit to make that happen. So we're certainly not there yet on the data front. We're getting closer, obviously, and it looks a heck of a lot better than it did under Biden, just not quite there yet. One of the things everybody's paying close attention to with the Middle East stuff is oil prices, and it hasn't yet worked its way into gasoline prices. This was as of 6/5, so slightly lagging data here, but gas prices have really stabilized year to date, haven't really gone anywhere. This is US national average. If you're in California or New York or other states, you're going to see prices higher or lower than this, obviously, but this will also chip away at our inflation gains if energy costs start to rise. So that's definitely something to watch for on the inflation front. GDP, if you remember last quarter, everybody was worried about this massive negative GDP print. This quarter, I don't hear too many people talking about the insanely positive GDP print. I think it's a 3.8. Yeah, 3.8% is the current estimate for this quarter. Maybe this starts to settle down in Q3, Q4, but this is not recessionary GDP. It just isn't. Now we can say certain parts of the economy are in a recession. We can say certain parts of the employment picture are recessionary. But using the data that they use to declare an official recession, we do not meet those requirements. As long as we keep printing positive GDPs like this, you're just not going to see a recession call. All the more reason that the party just continues into at least Q4. Now, if we look at some liquidity metrics, reverse repo is an inert pile of cash that gets taken out of the market. So if we want positive liquidity for risk, we want reverse repo getting drained, which is what we saw in 23. It's what we saw in 22 a little bit, but really it started in 23, right? That's when we had that 2 trillion stimulus effectively come back into the market. And you can see reverse repo gained a ton of ground here in 21 into the mid 2022. So currently, what is reverse repo doing? It's doing nothing. It's just flat. It's not taking money in. It's not putting money back out into the market either. So at the moment, the liquidity pipes look okay. But if this goes to zero, there may be liquidity issues, and then they may have to reinstate QE. That was certainly a concern earlier in the year, not so much now, when we're just at status quo effectively at around 141 billion here. Looking at the TGA, Treasury General Account, it's the same deal. Money in the TGA is money out of the ecosystem. It's money out of liquidity. So you can see 2021 into 2022, right? The extreme of money going back out into the universe. Currently, like many times before, we're running into the debt ceiling here coming up in August. So at the moment, TGA is spewing cash back out into the universe, and that is also helping risk assets. You can see the bump there was around tax time when the TGA has a decent move higher, and that's obviously negative for liquidity. And if we look at the X date or the D day, or whatever you want to think of this as, some estimates, again, a potato quality chart here, but sometime in August, possible. So we may see some anger here in Q3 with rates or yields or something, just worth making note here. If you're max leverage, full portfolio on something, just pay attention to what's going on going into August, assuming the debt ceiling isn't raised. Higher the debt, higher the deficit, the more investors move to fixed supply assets. That's better for crypto. None of us want this to happen, but most of us don't think there's anything that can be done to stop it. So that's why we choose plan B, which is to opt out of the long bond, to opt out of sovereign debt. We still have a 10-2 yield curve that is post-uninversion. So this is the rub, right? Because this looks like, hey, we've always seen a recession eventually when this uninverts. We've always seen an uptick in unemployment. Are we going to see it this time or not? Are we going to have a recession or not? You certainly first need to have unemployment spike. Without unemployment spiking, you're not going to get a recession. Without the markets crashing, it's very hard to get a recession. So markets at near all-time highs, unemployment near all-time lows, not a recessionary picture at the moment, but something to keep watching. It's just, where's the actionability here? It's certainly not go turtle mode right now. It just doesn't look like that until the data starts to look worse and we get this runaway unemployment. That's when it matters a lot more. But hey, right now the party continues to move on. Across these bond ETFs, looking at the TA here, it just looks very middling. TLT long bond continues to look very rough as it looks like it wants to head lower. There's no bullishness here on technicals. IEF flat, AG flat, SHI flat. Nothing here is screaming risk off. Similar to how gold has pulled back with geopolitical tensions easing, if you're in crypto, you really don't want gold to look good and you don't want bonds to look good. So in this inverse correlation type of way, this is what you want. You want these to look just awful. And that's what they do. They're not making higher highs and they're just ranging or making lower lows. Not something that is super inspiring for money to jump into versus some of the riskier stuff in crypto and stocks. And if we put it all together and we look at the US liquidity picture, Fed account balance minus TGA minus reverse repo, we are seeing liquidity start to tick up again, back to the top of the range. Nothing super impressive just yet, but this is very helpful, especially for alts, obviously for BTC, but this is what alts need. Alts need US liquidity specifically to start to do better. And you can see since 2022, we've basically gone nowhere. And US liquidity, it's just this huge range that we're in versus post 2020, where we exploded higher on US liquidity. And if we look at BTC, doing well on Monday here, didn't break down, and it's starting to get a little more convincing that we're going to try for something here, likely within the next couple weeks, just hovering at all-time highs. That's what you want to see. You want to see us just continually fight off these sell-offs. It's not a good look to lose highs quickly. You'd certainly rather consolidate at all-time highs than just drop 5% randomly on any given day. But this setup, certainly in play. Certainly in play. The question is just how low is this going to go if it does break down? 97, 98 would be the key June. We've reclaimed the Tenkin there again. Fractals tell you any higher high. And we're likely headed for an attempt higher at the very least. So I like 122 as a pit stop, and then eventually we'll settle in probably somewhere in the 150 range if we really get going. But it's going to be hard to keep this down with the liquidity picture where it's at. We switch gears to legacy charts now. Legacy Cloud is still looks overextended on IBIT. It's still trying to fight off this M double top. If this does move to a new all-time high beyond 64, I like 78, I like 90. Got an alert up there at 78. But this stuff looks like it wants to try to go higher. Whether or not it will, I don't know. I don't have a lot of confidence just yet, but it's clearly trying. It's clearly fighting off any weekend jitters, whereas you have MSTR kind of just doing a bunch of nothing today. Alts have done well, miners have done well, small caps doing decently okay. The question here is just how far do you want to go out on the risk spectrum? You can see gold pulling back a little bit today, flirting with all-time highs. Gold still looks fine to me. I don't see any issues there. But if we look at the SPY, still just hanging out at that 6,000 level. Nothing really to say here. It's just as overbought as it was last week. Qs, same deal. Not really much to speak of there. IWM still trying to hold the neckline, still trying to break out. Decent setup still remains on that one. And if we look at the Mag 7 real quick, for most of these, the train looks like they've already left the station, at least to me. That isn't to say they won't go higher. It's just from a trade perspective. Where was the entry on NVIDIA? It was at like 121. I wasn't a believer, but hey, here we are. Now is the rest of this just a rising wedge waiting to break down? Could be. Apple looks horrendous after this breakdown. Just struggling here at 200. It looks like an altcoin relative to BTC compared to everything else. Microsoft, night and day, right? What do you do with this here? I don't know. I literally have no idea. It broke down and then shot to all-time highs. Still very overbought relative to the cloud. Meta, just ranging. Still looks decent. Netflix continues to push higher, but again, this is very overbought on technicals. Amazon, similar to Meta, kind of just ticking higher slowly. Looks okay. Google, back above the cloud. Looks good. Tesla is a massive avoid. I think this thing just needs to range for a little while. So collectively in the Mag 7, not really much from a trading setup perspective is going on because they've all just lifted off aside from Apple. I think the story today has been in, this is SMH, so not so much SMH, but AMD had this IHS breakout above the cloud, had some positive news today. Marvell, same deal, IHS E to E. So I think the setups here are really just things that haven't moved yet, that still have a decent narrative, that have the chart, that have the technicals on their side, are where people are looking. I noticed Figs was up a bunch today. This chart, again, you can say what you want. It's a scrubs company, right? You can say what you want about fundamentals here. I just don't care because this is an insane chart that's setting up for a decent move, and I like the risk reward. So I'm in it. I like it. Rivian is another one, exact same chart, trying to break out, still kind of struggling there, but it looks like it's almost ready to go. And as long as we don't have mayhem and chaos and insanity in the world, this stuff should start to do a little bit better and should start to break out just from a relative value perspective, because it's just been down in the dumps for so long. It's just like ETH, right? These are just, ETH PTC is small caps versus Mag 7, right? And it's the same story where this stuff is starting to look very good, very compelling from a risk reward basis where it's sitting here. Now it's treading water a little bit, trying to break out. But it would not surprise me if anything that looks like this starts to do better, because that's just where the market's at now. And you can see oil down to earth. Tried to hit 78. That's down today. Gold down, like we said. And the VIX also below 20 again. One last setup I'll mention is on Reddit. Looks like a decent trade. Triggering today, you have like a nested inverted head and shoulders here. You have an Adam and Eve and or ascending triangle. It's all sorts of bottomy stuff. The last triple bottom thing failed. Fine. This one starts to look better because it's in the cloud. It's been another couple months. So I like it a little more here than I did back there. And it measures to 150, 160, 200 maybe. We'll see if we get any of that. But it looks decent to the long side. So all in all, at least today, it feels like everybody back in the pool. And alts really need US liquidity more than anything to push higher. It still looks to me like ETH is where the market's going to be on the altcoin side, at least initially, just how this is setting up. And we can talk about Sol or Ripple again, but they're treading water. They are doing nothing, right? From a trend perspective, this doesn't tell you anything. Ideally, this is a declining channel, bearish channel that is breaking out of eventually, but here today, Sol unquestionably looks worse than ETH. Ripple is still ranging despite a large move today. And so even though most of these alts are starting to look decent, we're just not there yet. We really aren't on a trend basis. They are not in a spot where you'd expect them to take off. That's all I have for this one. If you like, dislike, comment, share, subscribe, and happy trading.